Hello and welcome to The Trade. Let's get you caught up on what traders are watching out there. And of course, we've been watching the devastating impact of Hurricane Milton, which ploughed into the Atlantic Ocean on Thursday after cutting a destructive path across Florida that spawned tornadoes and killed at least 10 people. It also left millions of people without power. However, thankfully, the storm did not trigger the catastrophic surge that was potentially feared. Now, oil prices jumped about 4% on Thursday on a spike in US fuel use before Hurricane Milton barreled across Florida. And Middle East supply risks, of course, and signs that demand for energy could grow into the US and China also playing into the oil market. Gold prices extending gains, traders adding to bets that the Fed will deliver an interest rate cut next month following the latest data. Of course, the question is how big it might be. And the highlight in the calendar today is an interest rate decision from the Bank of Korea. It could be delivering its first interest rate cut since the pandemic, kicking off the easing cycle with a 25 basis point cut to 3.25%. Meanwhile, coffee futures closing higher, the third consecutive session of gains, the market continuing to assess the situation of crops in top grower Brazil, while cocoa recovered mid-session to finish up. Let's get into the technicals now. Jonathan Tacadena joining me from MPC Markets. Good to see you, Jonathan. So we spoke the other day and you were talking about the momentum in gold. Yep. You were right.
Okay, well, thanks for having me back here and thanks for highlighting that. So I was on here maybe a few days. I think it was Wednesday. It looked like gold was weakening and hitting that 2600 level. I did mention that that's kind of where that trend line sort of hits, and well, there it is. I've just updated the chart there, and it shows that basically it's hit that trend line and bounced off it. So the main catalyst being was that inflation was a little bit higher than last night, and inflation is a good hedge for gold, and obviously the traders decided to buy it last night.
And traders are buying gold stocks today as well. That is one very bright spot in the market. You've mentioned in the past a couple that you like, but what are you seeing in terms of momentum in the space?
Well, just continued momentum. So obviously the spot price has been the easiest trade so far. Like the miners have been lagging. So this is actually a chart of the gold miners ETF. You'll see that, excuse me, it's not as bullish as the actual spot price itself, but it's still...
I'll just let you recover for a moment while we're looking at that gold miners ETF, sort of on that high trajectory there level.
Yeah. And so obviously it's found that support there and had a good surge yesterday. So what we've seen is that the Aussie gold miners actually do lead that index there, and we're seeing that play out in today. So obviously all the major gold miners are at or near highs, like Newmont, Northern Star, all looking great. The ones that I've mentioned, Pantoro's looking like it's going to break out here. I called that around the 10 cent level, and looks like it's going to be trading 12.5, 13 cents soon. Catalyst breaks out to new highs again. That one's been the strongest out of the three, and even Emerald Resources, which is kind of lagged because it's been overseas based, but that has bounced over the last couple of days. So basically just stick to the gold miners at this stage. There's no reason to take profits from what I see.
But is it time to buy in when some of them are going up 5%? Is that looking a bit pricey or not?
Well, out of those, like if I had to buy one that hasn't moved as much, is probably De Grey. That was a bit of a longer term play. So they're kind of in the middle of their mine construction, and I don't know when they're coming into production, but they've got the money raised to actually build the mine. With that one, I'm happy to buy here, but know that the next surge will be once the actual mine comes into production.
I wanted to ask your thoughts as well on lithium, because when we were speaking on Wednesday, I think you said for Liontown, anything under $1 looks good. Liontown's bid up since then a little bit. I understand MPC's bought into Liontown. Yeah,
absolutely. So that did get down to about the 60 odd cents when obviously all the lithium names were like in the toilet, and obviously China stimulated. It's bounced there, but I remember earlier on in the year, I did say anything under $1 is good value. They did have their first spodumene sale and shipment earlier last week. They got a price higher than spot on their spot sales, higher than they got a premium in their sale price. So it's basically all systems go. And then what you'll see is that every quarter announcement from here on in, we just production increases, and this is how much cash is coming back to us. So it's basically anything. As I said, I'll keep that $1 as my target there. Anything under there, longer term play should be much higher than that.
All right, so you've been right on gold, you've been right on lithium. Where next should we look more broadly?
I think the easiest play here is just the Aussie stock market. So when I was here on Wednesday, I said that would break out to new highs. That hasn't come to fruition just yet, but the US did break out to new highs overnight and continued. It broke out on that Wednesday night. The Dow made new highs. Our market being more commodity based and obviously the financials kind of lagging today, we should see that break out to new highs next week.
All right, interesting stuff. Jonathan, thank you as always. Jonathan Tacadena from MPC Markets. That does it for this edition of The Trade. Be sure to join us again next week.